Hey guys, welcome to this week's Finance in 5, where we deep dive into the current events shaping Australia's real estate market. Get ready for a bit of a roller coaster ride. We're covering interest rates, surprising suburbs, and the shrinking share of first home buyers.
Yeah, it's a wild time in property, Jaden, from affordability struggles to mega $1 million listings. And we've got a lot to unpack today.
Welcome to the Buying Your First Home podcast, your personal guide through the Australian housing market. Here we tackle the big questions and the small details that come up when buying your first home. From financial prep to finding the right neighbourhood, we're here to ensure that you've got all the knowledge at your fingertips. So let's take the first step towards unlocking the door to your new home.
So first up, let's just unpack the RBA's decision to hold interest rates steady again. Most people are expecting cuts this year, but I think those hopes are fading. So what does this mean for anybody who's wanting to buy?
It definitely throws a huge curveball, Simon. Higher interest rates were meant to slow the market down, but we've seen prices rise over the last couple of months. Let's break down what's happened.
Yeah, right. So here's why this decision matters. So high rates usually mean slower price growth because buyers can't borrow as much. But we haven't really seen that this time. Other factors are still driving the market higher alongside with higher inflation. And it means the RBA is not really confident to drop the rates right now.
Yeah, definitely. FOMO, or fear of missing out, has been really powerful. It's the potential home buyers are worried that waiting for rates to fall will just mean prices are going to climb higher in the meantime.
Yeah, and what's interesting as well, outside of the interest rate rises, it looks like there's a bit of a two-speed market here as well. So people who are still buying and pushing those prices higher, they're usually buying these well-presented homes. So the ones that they don't need any work, you don't need to renovate or anything like that. You can just jump in, buy the house, and move in. Anything less desirable than that isn't getting as much attention in the market.
Yeah, we've definitely seen a renovation dilemma. So people are really scared to renovate or get a builder. You would have seen the news, but builders going broke almost every week at the moment. So they're paying much more of a premium on places that are done. And the ones that have been renovated or the ones that are locked out as investments, I've had clients that have said they've found DHA properties that have got long-term leases, and people just aren't interested in them at the moment as much as just a home to move in and live in.
Absolutely. And it's also worth mentioning it isn't happening evenly across the country. So every real estate market is different. And cities like Adelaide and Perth, they're seeing huge price jumps, even with these rising rates. And, the question is, why?
Two things really. Affordability. So affordability is still better there in Perth and Adelaide than it is in Sydney and Melbourne. And they just don't have as many houses for sale, just making competition pretty fierce.
Yeah. So for someone looking to buy now, I guess the real question is this RBA decision like good news or is it bad news? Look, it's a bit of a double-edged sword. So if rates are holding steady, it means that borrowing costs are stable. And it means that house prices may not go up as much. If the interest rates dropped, then we'd see an even steeper rise in property prices. But the downside is that we're not seeing any price relief coming anytime soon. If you are looking to get a mortgage now, you can't expect to have those payments dropping down anytime in the near future.
And even moving behind some of the headlines, you might have seen Warren Hogan, one of the economists in the market, saying rates need to go up 3 times in the next couple of months. There's really some key factors here that are going to drive the shift in interest rates, and there's potential for a downward shift in interest rates. Firstly, population growth has massively impacted the Reserve Bank's view on interest rates. The unexpected surge in population has really inflated demand, contributing to these higher prices. And while long-term immigration can dampen inflation, short-term spikes can create these inflationary pressures, which we've seen. And the government has come out and said they're going to start to cut migration and immigration, and will put less pressure on the rates here. The second thing the headlines are missing is some of the mortgage rate dynamics. There's still a lot of people in those long-term 2% fixed rates, which are coming off in late 2024 and late 2025. So this is going to put additional pressure on households and mean the Reserve Bank will be less likely to raise interest rates. The third factor is the labour market. Keep an eye on unemployment rates, as this can potentially shift the Reserve Bank's view. If unemployment comes off, they're going to be least likely to put the rates up and start cutting them sooner to spur on the market.
So I think the main lesson here is that the property market doesn't always follow the rule book. In fact, I'd say it probably never really follows the rule book, especially during times of economic transition like we're in now. And I think the key thing here is if you are looking to buy a home, you need to focus on what you can control. So you can focus on your budget, getting a pre-approval, finding the right location. You can't really affect the interest rates. So it's just best to keep that in the background and focus on the things you can do, and we'll see what happens in the future.
All right, so on the second topic, migration hotspots and impact on housing trends. Now, this is a huge talking topic at the moment. We've seen a big spike in migration, both from people moving within the country, so from state to state, and from overseas arrivals. Let's go through how this impacts the housing market, where you might want to buy, and why rental prices are on the rise.
There's a recent report from PropTrack, which was looking at net migration and how that has affected property prices in different parts of the country. I think before we dive into that, we just want to cover two things here in case you're not familiar with how they measure these things. So there is internal migration, and that means when people are moving within Australia. So if they're moving from one part of a city to another part of the city, or they might be moving interstate as well. And external migration is when people are migrating from overseas to Australia. So they have different behaviors in terms of what they do to property prices. They're not actually the same. So if you're looking at internal migration, so let's say that Jaden's living in Paddington at the moment and he decides to move out to Beaudesert because he's just bought an off-the-plan purchase and he's moved out there, that doesn't really have a lot of effect on the property prices. You know, when they're moving from internal migration, they're moving to affordable areas for new developments or for other reasons. We don't see these crazy jumps in rental prices or in property prices as you would see with overseas migration.
So overseas migration is the one to watch. And the data says a huge percentage of overseas migrants rent rather than buy straight away, which I guess makes sense.
Yeah, exactly. You know, more renters means that landlords can raise rental prices, and that means more investors want to get into the market, and that tends to push up property prices over time. And we certainly see this in certain parts of Sydney and Melbourne with a lot of new migrants moving to some areas, and those rent prices are jumping up in line with that.
Okay, so let's make this real. Can you give us a couple more specific locations where this is actually happening?
Yeah, absolutely. So the Melbourne CBD recently saw significant overseas migration, and rents there are up nearly 30% in the past year. Suburbs like Rockbank, also on Melbourne's outer edge, they had a lot of internal migration, and that's more of a sign of maybe longer term price growth, but it hasn't made the same jump in rental prices or in property prices as in those overseas areas.
And so I'm guessing this is probably something more for investors to pay attention to for these migration hotspots, because it probably potentially shows the propensity for rent to increase and increase your return in the future, right?
Yes and no, because if you're a first home buyer, you're often competing with investors. You know, both investors and first home buyers are often looking at similar types of properties. So if an area becomes attractive to investors, it means you're going to be facing more competition when you're looking to negotiate the price of the property. So it's not the most important thing to think about as a first home buyer, but it is a key factor. And I think it's worth looking at when you're starting to look at which suburbs you might be looking to buy in.
You've definitely had complaints of this, unfortunately, in the Perth market, where the price point of a lot of properties in Perth makes it perfect for first home buyers, around 500,000. It's moved up a little bit lately, but investors as well, because then they're getting a return. So doing your research and really considering your own individual goals is probably key here, but the data is definitely going to give a bit of an insight into your local area and help you out with that. So I'll include a link in the description below. So next up, Simon, I guess better news is affordable and I guess booming suburbs. Look at that as you will. If you're looking in the short term, potentially great. If you're looking at trying to get in the next 12 or 18 months, not fantastic. But if you're wanting to look for that perfect moment to buy and you're feeling stuck, we're going to go through that. So we're going to go through some incredible growth where potentially going to get some double-digit percentage increases.
Yeah, absolutely. Let's forget those trendy inner city areas, within the 10-kilometer city circle. Right now, with a lot of these sort of outer areas like Ipswich and Logan around Brisbane or Elizabeth North in Adelaide, they've seen median home values like absolutely skyrocket in the past 12 months. And I guess the real question is maybe buying in a location this might be less than ideal could be a great way to get your first step on the property ladder and start building some equity.
Yeah, so let's look at some specifics starting with Brisbane and Perth because, this PropTrack data is pretty crazy. In Riverview, which is part of the Ipswich region, west of Brisbane, the average home value increased by 127,000 in a single year. Like, Simon, for first home buyers, does kind of change the game?
It absolutely could change the game. Typically, everyone looks to buy their forever home, the place they want to live for decades. But if you had bought a home in Riverview last year you'd have $127,000 of equity that you'd built in that house. And let's say you wanted to upgrade in a few more years, then suddenly you've got a pretty large deposit and you can start looking at finding your forever home. So it's the idea of having this first home isn't your forever home. We say this a lot, but it's another time that it just rings true.
Yeah, it's a similar story in Adelaide. Suburbs north of the city, like Elizabeth North and Elizabeth South, have seen house prices surge by over 30% in the past year. So it's not just limited to Brisbane.
Yeah, and like just as you were mentioning about Perth, it's another hot market for affordable suburbs. Like areas like Girraween and Kelmscott saw median prices jump over 150,000 in just 1 year. Like it's a fascinating picture of where Australia's property market is right now.
Yeah, it kind of makes sense, but this type of boom always makes me wonder, like, why are these areas? Is it just the major cities getting an overhaul, or is something about these suburbs themselves?
Look, I think there's a few factors at play here. The infrastructure in areas like Ipswich and Logan and Adelaide's northern suburbs, there's a lot of improvements happening there, which makes them more appealing if you are a home buyer. Plus, you have interest rates rising, which has priced buyers out of some of the hotter markets. They have less borrowing capacity and they're looking for affordability. And then on top of this, then you've got investors. Investors love to see a 20% growth year on year. And so they're probably jumping into these suburbs and looking to buy as well.
I kind of feel like for a lot of people listening and watching, it might be like, well, it's cheaper, but do I really want to live in Logan or Ipswich? Is it worth, sacrificing that lifestyle to get my first home, to get in the property ladder?
I mean, it's a totally valid concern. And I think it's about finding the right balance. Like, can you tolerate a slightly longer commute if it gets you into the market sooner? Like, are you willing to start with a smaller home and maybe upgrade over time? There's no one size fits all solution. But for some people, the financial gain might outweigh the lifestyle compromises. Not to mention, there's always the concept of rent vesting, which we've discussed in other podcasts. You might even want to look at your first home being an investment home. And that way you can kind of have the best of both worlds.
Yeah, so I think if your budget's kind of on the smaller side, which is the case for a lot of people, like the message is try and think of outside the box. Like sometimes the less obvious suburbs might be a better move for you financially, especially if you're experienced. Some of these ones that we've talked about could be worth looking at.
Yeah, absolutely. And the sooner you're in the market, the sooner your money starts to work for you as well.
Yeah, so we'll include a link to that PropTrack report below. But I guess in opposite news, like looking at locations where there are fewer or more first home buyers, I guess it's a jungle out there. But new data reveals that there's a shrinking share of first home buyers in the market, down to just 1 in 5 new mortgages. And we're going to go into why that is and which states are really bucking that trend.
Yeah, and this ties into what we've discussed earlier in this episode and in the previous weeks, affordability, rising interest rates, higher prices, changes in government support programs. They're all making it tougher, especially, if you're starting from scratch.
Yeah, well, let's set the scene. Across Australia in March 2024, 1 in 5 new home loans went to first home buyers. And that might sound like a big amount, but it's a big drop because it was almost 1 in 3, a third of mortgages in January 2021 were to first home buyers.
Yeah, and there's 3 main factors that explain this drop. The rising interest rates, reducing how much you can afford to buy, the first home buyer grants are getting scaled back. And of course, we've seen some pretty outrageous price growth in a lot of areas across Australia. So all 3 factors together, it kind of explains why there's fewer first home buyer loans now than there were in 2021.
And it's also that price growth we talked about last week, but some of the government schemes with the price caps, like in Brisbane, for example, or if you buy in Ipswich, for example, we talked about Ipswich before, the maximum purchase price is $550, and we've seen house growth outpace what these government schemes allow. So the data gets pretty interesting though when you look state by state. Like Victoria and ACT actually had the highest proportion of home buyers, 25 and 28% respectively. But I guess their weaker property markets at the moment have something to do with it.
Yeah, definitely. Like Melbourne, for instance, has seen much slower price growth than cities like Melbourne. And we haven't spoken about it on this podcast, but there are some other sort of long-standing issues with Melbourne's property market, which means things aren't really moving as quickly. So it means that it's remaining a bit more affordable, perhaps, for first-timers there compared to other states.
Yeah, Melbourne had a couple of tax changes with investors getting out of that market, so it's helped that. But on the flip side, Queensland and South Australia have had the lowest share of first-home buyers, under 20%. So what's making it so tough in those specific markets at the moment?
I mean, I think this one, mostly price growth is one of the biggest things, especially in Queensland. For a long time, Brisbane had been one of the top performing property markets, and that growth over the past few years is just priced people out of the market. South Australia, I don't know if it's exactly the same case, but investor demand can also crowd out first timers, especially in affordable or entry-level properties like we've mentioned.
And the biggest changes in WA, in just over 3 years, the first home buyer share nosedive from 40% just to 23%. And we've seen investor activity really filling that gap. Why the sudden shift?
I mean, Perth is absolutely like the hottest capital city market right now. So prices are going way up, but the overall median price is still much lower than Sydney or Melbourne. And investors, they see that growth potential and they want to get involved. The rental costs are skyrocketing as well. So, investors look at it, they get a good capital return on their investment, as well as, paying off the mortgage with the rent as well.
Yeah, so I think market conditions where you're looking really matter. Rising costs are making it harder for first home buyers, but there's still options, I guess, if you look further out and use some of those strategies which we've talked about before.
Yeah, and this also highlights, like we've said earlier, that first home buyers and investors are often competing for the same types of properties. So if you see investor activity spiking in your target area, you'll need to be prepared to negotiate harder or potentially look to adjust your strategy altogether. And after all that, I think it's just time for a little bit of a property voyeurism break. So the Aussie Home Loans founder, John Simon, has listed his Sydney mansion, and the expected price tag, it's going to blow your mind.
Is this the place that's on Sydney Harbour that has space for 500 guests and a 2,500 wine bottle cellar? Because that's not really a house. It's a hotel, I'm pretty sure.
Yeah, that's the one. And they don't have a set price for this. They rarely do for properties of this value. But it's expected to sell for over $200 million, which would smash the current $140 million Australian record.
The crazy thing I was looking at before, the stamp duty cost on this for the person that buys it will be over $1.3 million. Like, that's like more than the median house price in Brisbane just for the stamp duty. It's just insane.
Yeah, absolutely wild. Look, we'll share a link in the notes about this house, but there's just a few things I wanted to mention here that are just pretty wild. There is a 3-meter long life-sized tiger made out of coat hangers as one of the statues in this house. It's got lifts inside, 2 kitchens. It's just absolutely wild. Theatre with seats for 22 people, 2 commercial kitchens. I mean, most of us are sweating over interest rates, and the ultra wealthy are playing over slightly different rules. And this sale, if it does go through, highlights the gap, between everyday buyers and this top end of the market.
Crazy. All right, so we tackled everything from interest rates to migrant hotspots and threw in a mega mansion for a bit of inspiration. Simon, give us a bit of a recap there.
Okay, so let's recap. The RBA holding interest rates steady. It's a bit of a double-edged sword. Borrowing costs are stable for now, but the price relief might be a long way off. The only good news there is that it will hopefully slow down the growth in house prices. In terms of migration, shaking up the market, more people means more renters, which means more investors, and that means higher prices down the line. And then next we looked at the affordable suburbs. Or are they really affordable? They might be now, but in 12 months' time, it could be a different story. Places like Ipswich and Logan are booming. It could be a chance to get on the property ladder. If you look at some of these sort of slightly less desirable areas with an easier price, because they can often outpace the market significantly. There's fewer first home buyers out there, which is a worry, but remember that each state is different. Some are investor magnets, others have better first home buyer schemes. Do your research. There's always a chance to buy a house, even if you are competing against investors or other buyers. And then finally, that $200 million mega mansion. Most of us wouldn't be living there or visiting there or maybe even seeing the place. And it shows there's always a market for the ultra luxurious, even when things are tough for regular buyers. And ultimately, the bottom line, this market is complex. And if you need help figuring it out,
hit us up at huntergallery.com.au. Thanks for listening, guys. See you next time.